Today we have some extremely important developments unfolding around XRP, regulatory clarity, and institutional interest. And what's coming in less than 48 hours could play a meaningful role in shaping the next phase of the XRP ecosystem. There are several moving pieces happening at the same time, from updates surrounding the Clarity Act discussions to growing investor demand reported by major asset managers, and finally a major technical upgrade approaching the XRP ledger. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Let's begin with the ongoing developments connected to the Clarity Act discussions. Right now, the digital asset industry and traditional banking leaders appear to be at a temporary standstill as negotiations continue under pressure from a deadline issued by the White House. The expectation is that both sides must work towards some form of compromise before the end of February 2026. According to reports being closely followed by journalists monitoring crypto regulation, the situation has even been described as a stablecoin standoff, highlighting how serious the policy disagreements currently are. An industry organization known as the Digital Chamber, which represents more than 100 crypto companies along with traditional financial institutions investing in digital assets, recently released its own framework proposal. Their goal is to create guiding principles that allow payment-focused stablecoins to generate yield within decentralized finance environments while still preserving their role as payment instruments. The proposal also emphasizes protecting DeFi liquidity, maintaining dollar dominance in global finance, and creating a data-driven framework to evaluate how stablecoins affect banking deposits. In simple terms, the industry is attempting to design rules that encourage innovation without destabilizing existing financial systems. However, traditional banks have not yet formally supported these principles. Sources connected to the Senate Banking Committee reportedly described the proposal as constructive, but warned that some elements may be too broad for banks to fully accept. This tells us negotiations are ongoing rather than finalized. Another closed-door meeting between crypto leaders and banking officials is expected soon, especially after last week's discussions ended without a final agreement. As we move closer to the end-of-month deadline, these meetings could become increasingly important because regulatory clarity has long been one of the biggest missing pieces for institutional crypto adoption, and XRP historically reacts strongly to regulatory progress. Now, shifting from regulation to market sentiment, something very interesting emerged from one of the largest digital asset investment platforms in the world. Grayscale, an asset manager known for providing regulated crypto investment products such as trusts and ETFs, recently shared insight into conversations happening between financial advisors and their clients. According to their internal observations, advisors are consistently being asked about XRP by investors. And in some cases, XRP ranks as the second most discussed cryptocurrency after Bitcoin within their investor community. This is a significant signal because it reflects organic demand rather than marketing hype. Investors approaching financial advisors are typically looking at longer-term allocations rather than speculative trades. The commentary emphasized that while many blockchain projects experience strong narratives before real-world adoption, XRP represents a technology that has already been battle-tested over many years. Instead of being a brand-new experiment, XRP has survived multiple market cycles, regulatory challenges, and industry shifts. Throughout crypto history, thousands of projects have appeared promising at launch, but eventually disappeared, leaving investors behind. In contrast, XRP has maintained relevance over a long period, which contributes to investor confidence. Large capital allocators often prioritize longevity, proven infrastructure, and clear use cases rather than chasing short-lived trends or speculative tokens. This helps explain why advisors find XRP easier to present to clients who want exposure to digital assets but prefer something with an established track record. Another key factor is utility. XRP is designed for cross-border payments, aiming to make transactions faster, cheaper, and more efficient, is relatively easy for traditional investors to understand. Beyond payments, Ripple has spent years positioning its technology within global financial discussions, building relationships with institutions, payment providers, and organizations exploring blockchain-based settlement solutions. This institutional positioning has created a network effect that many investors view as placing XRP closer to traditional finance integration compared to many other digital assets. When analysts perform due diligence and examine developments involving global financial organizations, central banks, and cross-border payment experimentation, XRP often appears connected to broader conversations about modernizing financial infrastructure. For investors thinking long-term, the question is not simply which asset is trending today, but which technologies are most likely to remain relevant years from now. At the same time, it's important to remember that cryptocurrency investing is not a guaranteed path to quick wealth. Serious investors increasingly approach digital assets as part of diversified investment strategies rather than speculative, get-rich-quick opportunities. This shift in mindset aligns with why XRP continues attracting attention. It combines familiarity, established infrastructure, and identifiable real-world applications. Now let's talk about what may become one of the most immediate catalysts, the upcoming activation of permissioned decentralized exchanges on the XRP ledger, expected in less than 48 hours. This development introduces compliance-focused functionality that could allow institutions to participate in decentralized trading environments while still meeting regulatory requirements. According to XRPL validators discussing the update, institutional participants cannot fully engage with decentralized exchanges unless compliance standards can be enforced. Without those safeguards, large financial entities simply cannot adopt decentralized systems at scale. Permission DEX functionality aims to bridge that gap by enabling compliant trading environments directly within the XRP ecosystem. If successful, this could represent a major step toward institutional participation in decentralized finance using XRP infrastructure. Essentially, it attempts to merge the efficiency of DeFi with the compliance expectations of regulated financial institutions, something the industry has been trying to achieve for years. So when we zoom out and connect all these developments together, a broader narrative begins to form. On one side, regulatory discussions are moving toward clearer frameworks. On another, institutional interest appears to be increasing according to asset managers interacting directly with investors. And technologically, the XRP ledger is introducing features designed specifically to meet institutional compliance needs. For years, XRP has faced skepticism and criticism, and debates around its future have remained intense. Yet, data points emerging from institutional conversations suggest a different perspective may be forming behind the scenes. While public sentiment often focuses on short-term price movements, larger financial players tend to evaluate infrastructure readiness, regulatory progress, and long-term usability. As this week unfolds, market participants will be watching closely for updates on the clarity discussions, outcomes from potential closed-door meetings, and the activation of permissioned DEX functionality. Whether these developments immediately impact price action or instead contribute to gradual adoption remains to be seen, but together they highlight a period of meaningful progress for the XRP ecosystem. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.